evening to all of you. Thank you for participating. This is the second webinar that the World Bank IFC's AgriFin network is co-sponsoring together with our colleagues in SAFIN in Rome. And there is a series of webinars related to the impact of COVID-19 on agricultural finance and ways to address the issues that they come up in financing the agriculture sector. As we know, agriculture plays a very critical role, and it's of course the source of food, and maintaining the financing of the agriculture sector is a critical point. We have started by doing a survey to various financial institutions, governments, NGOs, and to tell us about what is the impact of in their countries. And there have been good news and bad news in some way. The good news is that the agriculture still remains a strong pillar of the economy. There is still need for financing. The activities continue. However, due to transportation issues, there are some problems, and also agriculture is not immune in what is happening in the overall economy, but it seems that banks so far, they said that agricultural portfolios tend to behave better compared to the others, and they don't expect as many problems on agriculture as in the other sectors. So there is a mix of good and bad news. We had the first webinar a few weeks back where we set the stage. Maximo Torero from FAO presented the big picture of what is happening in globally in agriculture and agricultural finance, and then we had a conversation led by Greta Bull of SIGAP. This is the second webinar, and this is based on the issues that have been identified from the speakers of the first webinar. And this is about the non-bank financial institutions. A lot of what we have been talking and seeing in the press is how to assist the banks, the formal commercial banks. And of course, this is all well and good, but there are important financial institutions that they deal with the bottom of the pyramid. The smaller farmers, and this is the non-bank financial institutions. And this webinar is dedicated into understanding the conditions that they operate in COVID-19 and what they are doing to sustain agricultural finance, particularly for the smallholder farmers. So I pass now to my co-host Bettina Prato from SAFIN for her introduction. Thank you.
Thank you, Panos. So it's a pleasure to have the opportunity to be with you today, and I'm really looking forward to listen and to learn from the really distinguished panel that we have on the call today. Since we have limited time, the webinar is going to run until about 3:15 Rome time, so we have about an hour 10 minutes, and I want to make sure that every panelist has the time to bring his contribution, and perhaps there is also some time for responding to questions that participants may be posting through the chat. Through the chat box on your screen. I just want to say a couple of words to introduce the chair of today's webinar, and that is Juan Buchenau, as a senior financial sector specialist at the World Bank, where he is a core member of the Global Agriculture Finance Team and the Community of Practice on Cooperative Financial Institutions. Juan really brings a vast experience in the field of non-bank financial institutions serving the rural sector to the table. He's a former executive vice president of an American microfinance institution serving immigrants and their families. Before that, he was a lead advisor of the German consulting firm IPC per credit, helping commercially oriented microfinance banks in Latin America, Africa, and Eastern Europe to expand their services for small farmers and micro, small and medium enterprises. And he also managed for several years a program to support a multi-purpose small farmers cooperative in Mexico. So Juan, I think we're really privileged to have you guiding us through the panel today. And without further ado, I would give the floor to you. Just one note for participants to please remember to mute your microphones when you're not expected to speak. So essentially, if you're not the chair, one of the co-organizers, or a panelist, please do use the chat box to make any comments or questions that you would like to see addressed. This way we minimize background noise. So Juan, the floor is yours. Thank you.
Impact and the role of non-bank financial institutions in the COVID-19 response. As Panos was stating, NBFIs are oftentimes the entities that are reaching the farthest into the rural areas, serving a market that is deemed to be more difficult, more costly, more risky by many financial institutions. And NBFIs, be it MFIs, be it financial cooperatives or others, are the ones who do much of this job. In this context of COVID, of course, then the survival of these entities and the capacity of these entities to deal with the effects of the pandemic becomes crucial also in maintaining the financial flow for rural areas and for agriculture. So this event aims then to look at how these entities are faring within the context of COVID. And beyond that, given that the financing in rural areas is also in many or in most countries strongly dependent on public support, how the public sector is supporting these entities in their task. There is some noise, please. You all mute. So the idea of this event came up out of these considerations of thinking, okay, how are these entities faring? What are they doing themselves for the clients and members? And on the other side, what are public institutions doing, and how can they better work together in helping overcome this quite challenging situation? I'm very, very happy to have a panel which comes from 3 countries. So we have 2 colleagues who are coming from Ethiopia. We have 2 colleagues who are coming from Mexico, and we have 1 colleague from Bangladesh. So we have quite a diverse panel. And the idea is that this should be more than a presentation, an exchange of the experiences, the specific concrete experiences, and the dialogue at the end. So I will introduce then the panelists one by one before they're asking them to make their interventions. And while everybody is asked to be muted, I would kindly ask the panelists to turn on their videos so that we can see them while they speak. Our first panelist is Mr. Fasil Kadar. He is Deputy Managing Director of the Pali Karma Sayak Foundation of Bangladesh. The foundation, or which is also called PKSF, is a financial institution that was founded by the government of Bangladesh back in 1990 to finance rural development and to provide training and support to MFIs. The ultimate objective is to help the poor diversify and strengthen their livelihoods strategies. Fasil has played a key role in shaping this inclusive financial agenda, and he has extensive experience in implementing microfinance lending systems which are integrated with various types of value chain interventions. So he has very deep experience in the subject that is of our matter. He has also expertise in implementing climate change adaptation projects, risk mitigation services for low-income populations, and human and institutional capacity engagement programs. Thank you very much, and please, Fasil, if you can give us in a few minutes your perception of what the impact has been of COVID on the clients, what the impact has been on the institutions as a starting question. Thank you so much. Please go ahead.
Thank you. Can you hear me and can you see me?
Yes.
Hello.
Yes, we can. Yes, we can.
Bangladesh. Basically, we got active in government started taking actions for protecting us from this pandemic in the late March, in the last week of March, I mean, to be more precise. And from then on, I mean, basically they started with locking down the entire country. But there was some confusion. I mean, the confusion was whether this was complete lockdown or this was kind of a in-between thing, lockdown, and because they declared for the service holders, basically the service holders, they declared leave of absence, basically. So for that reason, there was lots of confusion. So this was not completely locked down. And then about for 2.5 months, after 2.5 months, they again, I mean, eased the situation and they started allowing people to come out, I mean, for resuming their activities to some extent. So, and we have very limited, I would say, there's ample scope of improving the testing facilities and other things. So I'm saying this because, I mean, there was lots of confusion how to fight with this pandemic. And the impact was, as a result, was very devastating. Number one, as you know, the microfinance institutions in Bangladesh, they have a client base of about 25 million. And at the moment, the portfolio is about $10 billion. And you know the very nature of microfinances, they have to revolve the money. I mean, the loan portfolio they have, that they recover the money and then the waiting, the MFIs can give loan to the waiting members. But for the last 2.5 months, government ordered MFIs not to have any activities on ground level. So there was complete, I mean, all the activities of MFIs were completely ceased at ground level over the last 2.5 months. So there was no loan disbursement, there was no loan recovery at the same. And recently from 1st June, the MFIs were allowed to go to the field again. And surprisingly, because Bangladesh has got a very long-standing good culture of loan repayment, I think for that reason and so for some other reasons also, the clients' response was very good. And for the last 2 weeks, according to our experience at ground level, at the field level, about more than 85% of the loan overdue over the last 2.5 months was recovered. So we have started giving loans again because government understood that we need to finance the micro-enterprise and agricultural sector, because otherwise we'll have in the coming days we'll have two impacts, two very negative impacts. One is with respect to food security, because we have 2 seasons. We call it, it's related with monsoon seasons. One, we call it Kharif in Bangladesh. Kharif 1 and Kharif 2. So Kharif 1 just ended, and during the harvesting of the paddy, there was, because of serious disruption in the transportation sector, there was shortage of labor in the Haur area, I mean in the northeastern part of the country, from where we have about 20% of the paddy of the country. But we handled the situation quite well, because we quickly imported lots of harvesting machines and used the machines combinedly to tackle the situation of labor shortage and other problems with regards to labor supply due to disruption in the transport sector. And then the input suppliers, they were kept outside the ambit of lockdown from the very beginning, so that the farmers can get inputs. And as you know, about in Bangladesh, 44% of the agricultural credit is coming from the input suppliers, and rest of the loans are coming basically from MFIs. About rest of the, 44% comes from the input suppliers, and rest 56 out of 56%, of which 85% comes from MFI sector. So MFI sector now they have started operating, but the government incentive, because over the last 2.5 months we made a quick perception-based survey, which is not, I will not claim that this is very representative of the whole country, but it can give us a general perception what is going on at the level with respect to disruption in their income flow and other things. We found that more than 80% on an average of the the farmers and marginal farmers and micro entrepreneurs, they lost their income. About 56% of the total in the micro enterprise sector, that includes the agricultural micro enterprise also, their income was almost zero during these 2.5 months. And about 86% of the farmers, their income declined dramatically. And basically they coped from their savings, which they kept for investing in their economic activities, and they have for coping with the incomeless situation. They have only 11 days capacity, we found. And the relief government has broadened its social safety net program, which has got enormous scope for improvement, and government is trying its best through the usage of cell phone based financing system to provide the government safety net based incentives to the people. And another, I will close here with this point. Government basically tried to provide incentives for the agricultural sector and micro enterprise sector through commercial banks, and they deployed central bank for this purpose. But the problem is the commercial banks, they don't have any comparative advantage in providing financial services to the marginal and small farmers and micro entrepreneurs. And in Bangladesh, they basically try to cover the SME sector through commercial banks, and the micro enterprises were, according to their perception, that was included within the SME sector, which is a fundamental mistake, because in Bangladesh, SME sector is not very big. The large part is the micro enterprise sector. We have about 10 million micro enterprises in the country, and the SME, we have only 70,000 SMEs in the country. And the SME sector, which includes the agricultural micro enterprise, the micro enterprise sector, that contributes that their contribution to GDP is about 25%, and to employment, it's about 56%. The government only provided about $700 million for this sector through commercial banks, and PKSF, they have given about $100 million, a little less than $100 million. But in PKSF, what we did, just the last point, through Asian Development Bank and World Bank and International Fund for Agricultural Development, they came forward, and we are mobilizing about, considerable amount of resources so that we can start financing the micro enterprises and the agricultural and the farmers. I'll stop here.
Thank you very much, Fazlul. Very, very insightful, very good details, and a very challenging situation. I'm really surprised to hear that the MFIs were able to recover so much in such a dire situation. So maybe something worth looking deeper into in the next round. As next panelist, we have Berhane Kidanu. He is the team leader for the Rusako capacity building team in the Ethiopian Agricultural Transformation Agency. The Agricultural Transformation Agency, or ATA, is a public institution of the Ethiopian government that aims at identifying and addressing the constraints of agricultural development. And they do this through studies as well as through specific projects that they implement with resources from the international community. It supports also the establishment of linkages among the agricultural and related institutions in order to ensure the effectiveness of agricultural development activities. Berhane himself, he has worked in the financial cooperative sector for the last 16 years, and he is currently the team leader for this capacity building project. And prior to this, he served as a national program coordinator for the Rufib cooperative subsector. Berhane, if you can start, please, and show your screen, you would have then 5-6 minutes for your presentation. Thank you so much.
Okay, thank you. Can you hear me? Can you hear me?
Yes, we hear you very well.
Okay. Good morning, everybody. Already you have mentioned it is, even though it's a public organization, its mandate is, to support government institutions in identifying key issues and giving technical support to government institutions. One of them is the Federal Cooperative Agency. Let me talk about the SACCOs, Saving and Credit Cooperatives of Ethiopia. SACCOs in Ethiopia are very tiny. They are not part of the financial institution system. Rather, even though they are supervised and regulated by a separate government institution, that's Federal Cooperative Agency, they are considered as semi-financial institutions. So this, especially I want to focus on the rural saving and credit cooperatives, those who are striving, in delivering vital service to the rural population, but struggling to meet customers' demand. If you see some of the data back 3 years back, when we conduct an assessment, I think 2% of the rural population saves in RUSACOs only. Only 2% of the population saves in RUSACOs. And 0.5% of the rural population obtain loans from these institutions. So we can see this, how these institutions are very tiny. In number, actually, we would have around 22,000 RUSACOs in this country. But in terms of their capital base and saving mobilization activities and what have you, it's very, you can't imagine that serving 5.4 million population of the rural areas, they have a capital base of only 147.6 million, and with a saving mobilization of 416.4 million USD only. So we can see that how these institutions are tiny and they're suffering of this liquidity problems. Besides, they are suffering these operational inefficiency gaps. Even their manual system is not efficient. So what it is doing now is, we conduct an assessment and we want to focus on 6 major issues: on the products and business areas, on the capacity building diagnostic framework, on the strategic intervention, on the policy and regulatory environment as a project. And we are trying now, since these circles are fragmented, we want to establish a sort of center where from this center, this tiny institution can reach different digital financial technologies so they can provide, efficient service to these institutions. So we want to align what we call a centralization of RUSACO service with the support of RABO partnership and World Bank together, so we can integrate or synergize our RUSACO capacity building and get service, get these institutions, centralized, then manage their service so they can be operationally efficient and provide the required services. Since these RUSACOs are highly fragmented, we can't even catch up how this COVID-19 have affected these tiny institutions. But some data or some information that we gather from some regional states, we see that there are saving mobilizations have been affected to some extent, especially in the last first two months. And at the same time, loan repayments have been affected also. So in terms of loan repayment, actually, they have a system, or rescheduling of these loans. So the members can pay when can pay their debts later. Beyond that, actually, some good performing SACCOs, not rural ones, the SACCOs at the urban areas are supporting, the population who are at risk with COVID due to their lose of their jobs. So they are supporting in terms of they are supporting by providing, food items and what have you. These are some of the initiatives that have been done, independently or individually by primary SACCOs. But we didn't have, an integrated and coordinated system on how these SACCOs can, cope up with the problems that are encountered at this time. This is somewhat in brief about the RUSACO in Ethiopia. Thank you.
Thank you very much, Berhane. Much appreciated. Our next panelist is now from another continent. It's from Latin America, and it is Ernesto Fernandez Arias, who is from Financiera Rural. Sorry, Financiera Nacional de Desarrollo. It was once upon a time Financiera Rural. Financiera Nacional de Desarrollo is an entity that was established by the Mexican government, replacing the old agricultural public bank. It is an entity that provides loans, but also technical assistance to MFIs and to financial cooperatives, and that also serves smallholder farmers and smallholder farmer organizations directly with financing services. Ernesto himself is an electrical engineer, and he has a master in business administration by the Universidad Michoacana and the master of economics by Vanderbilt University. He is also an advisor to investment strategies at the Mexican Stock School, and is currently studying a PhD on quantitative risk analysis. So he's currently the Deputy Director General for Finance Operations and Systems at the Financiera Nacional de Desarrollo. And Ernesto, if you can please go ahead. And I see you're showing your screen. I much appreciate it. Thank you so much.
Yes. Thank you for invitation. Our General Director, Javier Delgado, is also with us. So if I say anything wrong, please correct me. But now with the crisis in Mexico, we are mainly attending non-bank banks, financial intermediaries, also some banks, but this development financial institution from the Mexican government is dedicated mainly to the first floor and second floor tier, and using the financial instruments. So what we saw in the sector is, first, with this COVID, we saw that the main problem in the sector was, we saw that the food is essential. So we didn't saw that even the exportations and the local demand got down. For the meat sector, we saw that in less scale, that the producers now exporting primarily to the European Union, but they face some problems with the sanitization and this kind of stuff. So but we even didn't saw that the several problems with the production and with the demand, but for the tourism industry, we paralyzed, some of the tax and the form that the government used to stop the pandemic, and was stopping and closing all the tourism industry. So the hotels closed, and this industry is paralyzed right now, and also the restaurants are closed in Mexico. And only they can sell the food to carry out, to pick up, and this industry paralyzed, but the people continues demanding food in a different way. And for those business who have problems with because they stop, we saw that the pay capacity got down, so they have problems with the credits and also with to cover the original amortization scheme that was designed in the credit, and it was a liquidity problem for the non-bank banks institutions, facing also risk and a new cash pressure. And what we saw and what we did in this area of the bank was asking to the federal or national banking and securities commissions, and who is for local regulation, to asking for a special ability and have a plan to don't submit all these non-bank banks, financial institutions to be classified as because they didn't pay on time, be immediately classified as a bad loan. So we were asking for a special accountability schemes to all this restructure and redesign of the credits to don't be considered as a bad loan, and also to be asking us for more liquidity or more reserves that we need to consider in order to sustain our capacity in the market. And the second was the Central Bank of Mexico. So one was the National Commission that was giving us a special accountability not system, but a special form to contabilize the credits. And the second one was from the Central Bank of Mexico, who took steps first to the currency markets and also hedge as a policy to increase the liquidity in market and trying to stabilize the liquidity that was asking for the market. So giving the special loans to all the portfolio what was affected by the COVID. And what we saw in the last report from the central bank for what's including what's the challenge that they saw from the financial institutions, and once in the to avoid operations and liquidity problems in the community agents, trying to fix this needs of liquidity, maintain the flow of credit required by the companies, households, and some financial intermediaries, and maintaining the flow credit required by the companies. So these three issues, what we did for non-bank banks, we also have a special program in order to challenge this, restructuring their loans and trying to give liquidity to the system. And it was good for us that because we already did several changes in the banks, that we are cashable, we have money in the pocket, so we were able to face this challenge. And what we saw now is the future that, you know, this pandemic is still there in Mexico. We began last Monday opening some businesses in the half of the country, and the economy begins to is going to be recovering in the next 6 months probably, but still they are going to be facing this lack of liquidity. So what we're trying is to keep all the credit lines to be open and be ready to have a lot of cash in the pocket in order to supply these needs of liquidity in the system. So is the strategies that we have been working in the bank, and I hope this can help to the youth and to know what is going to happen in Mexico.
Thank you very much, Ernesto. Very, very interested and different situation from the one we heard from Ethiopia and Bangladesh, so very interesting. Our next panelist is Guillermo Jimenez. Guillermo Jimenez is the general director of ProCrédito. ProCrédito is a Mexican microfinance institution. It is a lending-only entity that is commercial. It's a private institution, and it is oriented to serve the rural areas, including also agricultural and agricultural MSMEs and farmers. So Guillermo is the chairman and CEO of ProCrédito, and ProCrédito, as mentioned, was established in 2007. And prior to this position, Mr. Jimenez was the founder and CEO of Inpatria, a Mexican financial institution that were working on mortgages and financing residential developers. He started the career at Banamex, which is one of the largest banks in Mexico, and has held where he held several positions for 11 years. So Guillermo has been moving through the market and interestingly going from large to small. So Guillermo, if you can please give us your views about what the impacts have been of COVID on the activities of your institution and how you have dealt with them. And if you can please show your screen. Hello, Guillermo? You're muted. We can't hear you.
The microphone.
Yes. Now it's unmuted.
I go ahead.
Hello?
We hear you. And we see something.
This is the Shomas from.
Oh, Teshome, you're after Guillermo. Guillermo?
Yes, I'm trying to set up my microphone.
Okay, now we see you.
Can you hear me now?
Yes, we can hear you.
Thank you. Sorry for that. Good morning, afternoon, and evening. Depends on the part of the world you are. As Juan said, I'm a part of a private-owned company, which is focused on a small business in many sectors. And one of the sectors we are targeting for the last years is agricultural. As my colleague from Mexico said, in Mexico, the problem was more than a shift from, I could say, hotels, restaurants, consumptions to household consumptions. And then the producers of those goods will have to sell their goods instead of build hotels and resorts in Mexico, try to get it to cities. And as you know, the amount of consumption is not the same. This is not the same amount of what a restaurant can ask, or a big hotel, or a convention center. There are people that are in our houses just trying to go through the pandemic and staying home. So the consumption went down. And also in another part that we manage is the export demand. The export, they have some problems on the border. Most of our exports for agriculturals is to the US and Canada. And even in the US and Canada, some of the consumption changed. It changed from fresh products to frozen products. So most of our, let's say, the part that we do is agricultural. We go do from any kind of vegetables to berries, to strawberries, to any kind of berries. And the market in the US started to buy, instead of fresh products, starting to buy frozen products. That, I think, went all the way through from March to maybe the end of May. And now we see that they're starting to go out in terms of the US and Canada markets, and start to buy fresh again. In terms of Mexico, restaurants, most of them are still closed. Most of them, tourists, is still closed. Starting to open as of Monday, I will say, and consumption will start to pick up, but we don't see that to do before July sometime. What we did to our customers, I would like to set up an example. With the beginning of March, rather the second or third week of March, we decided that we first have to keep our customer base healthy. So we decided to go first to the ones who are healthy in terms of financial health, and try them not to get it to past due or to go on a bad loan. So we launched a program that will take 3 months, for the month of March, April, and May. And we will offer those customers that will stay on payments, in current payments, we will offer them a discount of 50% of the rate. So that we will encourage them not to go past due, and whatever money they will have on their pockets, they will use it to keep their loans currently. That was successful. I think around 70% of our customers joined that program, 68%. And then we took a hit on our balance sheet, rather on our statement, because we get less income, but we had a better balance sheet instead of because of that. In April, we decided to target the second wave, as we called it, and those were the customers that didn't have liquidity at all. They were not able to pay even 50% of their payments due on each month. So we give them how should I call it, a moratorium. So we can give them 3 months of no payment, and then after those 3 months, that will start sometime in August, they will start paying us whatever we refinance, and for a year. And that took the other 20 plus 18% of our customers. And in that way, we managed to get our past due loans on a reasonable level. We cannot say that it's good for the company. It's still above 5%. We came from past due loans around 3.5, 3.8%. But we see payments, which is great for us. We see people willing to pay and willing to keep their loans alive. What we're doing going forward is try to specialize in those farms or let's say agricultural business, small agricultural business, who are focusing on product to export. Some of those customers we had before, they will export and some they will not. Now we are focusing for let's call it the next month or so on companies or small farmers who are shifting from I don't know, small farm to not technological advances to ones who will have some, let's say, from irrigation system to greenhouses or tunnels to see any kind of product that will be will have less problems with the climate, and they will have an export facility that they'll go through big companies. So we are working with 2 or 3 big companies that export a lot of products to the US and Canada, fresh products, that those companies will hire or will buy products for really small farmers, such farmers that will have maybe 1 hectare or 2 hectares of products. And before that, they will have maybe, I don't know, corn, or they will have cows or any other kind of agricultural business, and that they will want to technify themselves and grow. So we'll see that growing in Mexico, and that's a way we focus for the next second semester, I will think, and that will be an opportunity for those growers to have another market to send their products. We mainly finance ourselves through private funds, Mexico and companies or banks and international funds, and we are as early as this year starting to work with government to get some finance from the Mexican government to do these products. I think in terms of time, that will be my contribution to the panel.
Thank you so much, Guillermo. Much appreciated. And last but definitely not least, we have Teshome Kebende. Teshome Kebende comes from AMFI. This is the Association of Ethiopian MFIs, which is a non-profit, non-governmental organization established in 1999. So they have a long track record, and they have currently 28 member microfinance institutions. Teshome is economist by profession, and he has been working in a variety of sectors, including the microfinance sectors, for more than 20 years. So he has a deep experience in this area, and he's currently the executive director of the Ethiopian Association of MFIs. So Teshome, if you please can go ahead and show your screen and make your Teshome, I see that you're muted.
Hear me?
Yes, we hear you. Thank you so much. Go ahead.
Thank you. was trying to connect from the very beginning, but unfortunately, because of the connection at my end, I joined you late. Anyways, I'll try to cope up. I will send all the information that I'm going to present to all of you through email. Anyways, I'll try to say something related to the topic and the discussion. Ethiopia, as a formal financial service providers, includes banks, insurance companies, microfinance institutions, and the lease finance companies. There are also credit and saving and credit cooperatives, which are currently spread out throughout the country. Mainly services, credit and saving for people. Anyways, banking sector in more than 92.6% in terms of total assets. Despite this, as players in the finance sector, as may be clearly known, level of financial inclusion at the country level is slightly above 35%. It means nearly about 35% of the adults have bank account from the formal banking sector. In fact, the microfinance sector is expanding aggressively in the country. Because of this, there are 39 microfinance institutions by the central bank, by the National Bank of Ethiopia, to give people in both urban and rural settings. So, as I said, MFIs are expanding in the outreach, but though they are expanding aggressively, satisfies the significant demand which is so far. So much effort is to address this demand. The fact that large number of population in Ethiopia, especially in the rural areas, particularly in the remote areas, are still awaiting for the financial service from institutions. With risk coming back to the COVID-19 challenge and measures taken by the government, as you may know, the health crisis grew quickly in Ethiopia, like it is in most of the world. So currently there are about 3,521 confirmed cases as of yesterday, June 15. So the government is making its level best to contain this virus. So as part of this effort, the borders are schools are closed, and the government has also announced social distancing measures. Again, as it is done in the rest of the world, all people entering are subject to a mandatory 14 days quarantine. The government has also announced a state of emergency to impose more health measures. Again, for a short period of time, there was a lockdown restrictions on all but on some crucial economic and social activities started in the middle of March this year. the government took some physical measures. 5 billion Ethiopian birr package to boost the healthcare spending in early March. Pay wages to avoid labor layoffs. Again, inject commercial banks, microfinance, and the cooperatives as part of responding to the COVID-19 pandemic. Coming back to the impact, though the government has made this effect, and the movement restriction of the have affected the microfinance institutions. The fact that the microfinance staff will not go to mobilize the staff to make repayment as because of the restrictions, those period of time, the customers, the borrowers of the microfinance institutions will not sell their produce to make loan repayment to the microfinance institution. Because of this, there was loan repayment problem in rural areas, though it was not, serious like it is in where there was significant decline in business activities because of these restrictions. So, because the government has also tried to, sectors which employ a significant number of laborers, daily laborers, like the fact that the sector could not export flowers because of the decline in purchasing countries because of the restrictions. Anyways, the government has tried this effort. With respect to the sector, the microfinance industry has tried to respond to this pandemic. The response was at two levels. One was at the association level. The association is an umbrella institution where 9 microfinance have tried to be members. As part of as part of being the umbrella institution, the association has tried to advise all member institutions to carefully implement the WHO safety guideline as part of awareing the staffs and their clients to protect themselves from the infection.
Okay.
So also, the association has commissioned a study to learn more about the impact of the pandemic COVID-19 on the microfinance institutions, their customers, and to come up with rescue strategies for the microfinance industry as a whole. So it is not yet finalized, but the study is going on. This is another response measures that was taken by the association. Again, the other measure taken by the association was had a discussion with the regulatory authorities, with the relevant government authorities on how to save, how to jointly work to contain and serve these microfinance institutions through different levels. So as part of this effort, based on the discussions that was made with the regulatory authorities, liquidity was injected by the National Bank, which will be managed by the Bank of Ethiopia, that MFIs which are affected because of the pandemic, because of the non-repayment of the loan by the businesses which are highly hit in different cities. And after the discussion, the National Bank of Ethiopia has also adopted some of the prudential requirements to accommodate the increasing portfolio at risk at some of the MFIs which are working with MSEs affected by the pandemic. The other response at the microfinance institution is the first measure taken by the microfinance institution was to raise the awareness of their staffs and their customers so that they can protect their staffs and the customers from the spread of the virus. This was the first measure that was made by each microfinance institution. As part of this effort, as part of creating the awareness of the staff and their client about the pandemic, they distributed the necessary sanitary items which could be used by microfinance staffs and their customers while doing transactions. They distributed sanitary equipment in the facilities. Again, as part of managing the crisis, most of the MFIs try to separate the staff into depending on the type of activity they are engaged in. The staff are allocated or given a chance to go home just to use, physical distancing among the staff. As it is clearly known, the office, the nature of the business and the office MFIs are working could, expose the microfinance staff to this virus. So to overcome this, the HMFI organized staffs into teams in which they work turn by turn. All of them are not required to come to office. Some of them are working from home. Some of his staffs are given a chance to come and work from office. So some of the things. Again, after getting, as I've tried to say, the association didn't want HMFI to take unilateral decision with respect to the response to be made to the pandemic. The association, though it is a voluntary association, gave a direction to each member institution so that they scrutinize the type of activities which are highly affected, critically identified, so that it will be possible for them to take measure. Identified business which are highly hit by the pandemic. So MFIs now started to take measures. measures.
Sure, please, if you can please come to an end. We thank you so much. But please, if you can please close your presentation.
Okay.
I hate to interrupt you because it's really super interesting, but if you can please conclude so that we can do the finish the event. Thank you. Sorry.
Thank you.
Oh, you close like this?
Yeah, you know, MFIs have started rescheduling based on the concrete evidence they have collected from each customer. Again, we at the level, we are speeding up a shared core banking, core MIs, so that we can bring in modules like alternative delivery channels, which will help to implement alternative delivery channels like agent and mobile banking. Aggressively working on this. So these are some of the issues that we are currently working at the association level with respect to the response to the.
Thank you so much. Thank you so much. And sorry for interrupting you. So we don't have much time, so I would like to ask each panelist just very, very quick and a little bit taking on the last comment made by Teshome. Now this crisis is apparently also pushing innovations. It's pushing several things. It's increasing the collaboration between the public sector and the private sector, apparently, but it's also having an impact on pushing innovations in finance. If you could say just in one sentence, do you see innovations being, which innovations are you seeing being more important for the future of NBFIs serving the agricultural sector? Just 1, 2, what are the innovations you see that are coming and which we will be having to look at in the near future? So if we start with Faslun, please.
Okay, can you hear me?
Yes, we can.
In one sentence, digital financing may be the best innovation in this context, so that we can maintain the social distancing thing. At the same time, spread of virtual financing or the digital financing system, what we call in Bangladesh, the mobile financial service will be expanded, I think, in this context in Bangladesh very quickly. We have started working on this. And one final sentence I want to say, the core challenge before us is, it seems that this COVID pandemic has come to stay. This virus has come to stay for quite some time until we invent a vaccine. So the challenge is to resume all of our economic activities in a COVID-19 compliant manner. That is the challenge. And digital money, spread of digital money, this innovation will be the key instrument in the coming days. Thank you.
Thank you so much, Fazlur. Berhane, what is your takeaway on the innovations?
Well, as I have already mentioned, the digital financial technology is the one that we can bring this fragmented resources so they can bring or centralize their services so they can provide diversified product efficiently. But this is not something that we can perceive it within a short period of time. This is a project to be launched on the coming Ethiopian calendar that's beginning August, even though we have at the general solution identified this digital financial service, there is no way that you can do, you can accomplish this task within a short period of time in tackling the COVID-19 adversaries, the created adversaries due to this COVID-19. Generally, it's understood, but no way, that's the problem.
Thank you so much, and also for pointing at the challenges. Ernesto, what's your view on the innovations?
Yes, we start last year. I'm gonna answer with a history. Pardon, sorry.
Short,
But
very short.
Last year we began with our General Director Javier Delgado and a strategy in digital finance in the bank. So all the investment that we did is that investment that allows today to be working on distance, to be working at home, because in other way we probably stop with all the credits because it was kind of impossible to be away from the office and away from all the security with the security that is inside of the building in order to keep all the information secure. So what I think is the digital banking is the future, and that's that we are doing. We are having now investment to lead or objective population that we have to address, to be able to have credit using their cell phones, using any way that the electronic device that they can be able to address us. So the pandemic also teach us that is the future. We have to be able to address our clients using technology, and it comes with innovation, of course. Sorry.
Okay, thank you so much. Will FND provide the technology itself, or will it be supporting the MFIs? Just quick, one or the other, or both.
Sorry, can you repeat?
Will FND provide the technology itself, or will it be provided through the MFIs?
No, what we did is that we invest in a core bank, a core banking, ABIAN. It's a banking industry architecture network that allows us to be in the top in the technology as an yes, to provide, in order to provide to all our clients and to the system access to our services, our financial services.
Thank you so much. Guillermo?
Hi, can you hear me now?
Yes. Yes, go ahead, Guillermo. Hello?
Yes. Somehow my computer is not.
We see you. But now we don't hear you. You're muted. No. Hear me now.
Now?
Yes.
You hear me?
Yes. Go ahead, please. Short.
Sure. Yeah. We are just developing a factoring scheme for our small agricultures. So we have a fintech that will allow the small producers to discount their invoices, the ones that they sell to the big distributors. I don't know if you can hear me because I have my mic says that it's not.
That's okay. We understand you very well. Thank you.
Okay, but basically it's chain supply, and we get more liquidity to the producers this way through the big consumers and the big distributors.
Excellent, thank you so much. Teshome, so very short, what type of technology, what are you thinking as innovations? And you mentioned digital before. Teshome?
We are now in the process of implementing a shared MIs for nearly 30 microfinance institutions. So we are also planning to bring alternative delivery channels to this core banking so that MFIs could be able to reach people instead of going or giving a service by opening physical branch. To cope up with the pandemic, we are speeding a shared platform for 30 microfinance institutions. Again, we are now there is a payment platform which was started earlier. We are expanding it. There is a platform which we call MBIR, which is about 6 institutions. We are now in the process of with this digital payment means. Thank you.
Thank you very much. So I yield now the microphone to Michael Ham, who will be making some final concluding remarks on this. And I thank you very much for your participation and your presentations.
Well, Juan, this is a huge task you asked me to do, because the presentations by the 5 presenters were so rich and diverse, surprisingly, because I thought when we thought about the topic that we will hear a lot of similarities on non-bank financial institutions. But I think the starting point, my first observation, when we talk about non-bank financial institutions, we're not talking about one particular entity. We are talking about big, large MFIs, deposit-taking and non-deposit-taking microfinance institutions, community-based financial organizations. We heard about the financial cooperatives, SACCOs, root SACCOs. So it is a wide range of institutions. And their problems are very diverse, but there are also a number of commonalities. We heard of these NBFIs. How they are affected by the pandemic indirectly, but directly through imposed restrictions of their governments and regulators. So it is of utmost importance, what we learn, that these NBFIs are included in much larger support measures for financial sector stability and recovery by the governments to keep the economies moving. Yeah. So to improve this, we have heard, for instance, building linkages of these NBFIs, which are much closer to the targeted segments, being in rural areas or smaller businesses, than any of the larger commercial or public banks could be. So we need to focus on linking these institutions, but not only, we heard now in the last round, this is also the opportunity, and perhaps the pandemic represents the most significant driver of the need to digitally transform the operations of these NBFIs. We have even heard now, to engage fintechs, which take part of the roles of the operations for one of the large MFIs, ProCredito. The major problem we have tackled today is in the 3 countries, as we have heard, in Ethiopia, Mexico, and Bangladesh, is the liquidity issue of NBFIs. And this need to be addressed via public banks or special purpose vehicles through public sector banks. There are various options we have heard about in the form of short-term debt and the like. Further on that side, how to secure the business continuity of the NBFIs. We heard a number of very constructive, I believe, we'll see powerful instruments of governments and regulators. So one is regulation, relaxation of regulatory requirements. And then also, I heard a bit too little. I wanted to hear more about how to address the customer side directly of the NBFIs and to how to make their business continuity happen, because I mean there's a financial value chain we need to take into consideration. So we heard only 2 examples of discounting rates for customers, loan repayment moratoriums. I don't know whether this was only on the micro, the customer level or the NBFI level, perhaps both. So these are the main takeaways from the presentations. Perhaps in the next round, we need to focus more also on conceptualize more the enabling environment to bring the fruition of NBFIs and public banks or any other commercial bank more into the game. And I have one last point, not to take away directly, but it's a more kind of aspirational idea I got. I believe NBFIs in the broad sense actually constitute an ideal organizational structure, perhaps a unique organizational structure available for other government programs to distribute cash, but not only in money terms, but also for other food supply programs and other support programs for poor neighborhoods as the clients of these NBFIs. So in future, we may think much broader than just the financial services, rather than packaging the services for the end beneficiaries, the customers of the NBFIs. So I stop here. Unfortunately, the time is running short. Over to you, Han.
So thank you very much. And well, I would like to thank all the panelists for their participation. I think it was a very, very rich discussion. It's striking to see that the pandemic is apparently not only fostering technologies, but it's also apparently fostering collaboration. And collaboration between very different stakeholders that did not talk much. I was very positively surprised to hear what the Association of MFIs in the RUSACOs are doing in Ethiopia. This collaboration, which is emerging, is allowing, or will allow, hopefully also, to build the structures that will allow for more resilience of agricultural finance in the medium and long term. So I think this is for me a very important key takeaway. And again, thank you very much to everybody. It's been a real pleasure to share with you this event, and I look forward to future activities. So
thank you, Juan. Thank you, Juan. Thank you, everybody.
Thank you, Juan.
Thank you. Bye-bye. And Javier, nice that you were.
Thank you. Thank you very much.
Bye.
No.
Yes. Bye, Javier.
Bye-bye.
Thank you.